A recession is an economic detox, which means there's a shortage of money and credit available to consumers, which is why a lot of people start to cut back on their spending and reduce their expenses. In this video, you'll learn 3 benefits of cash value life insurance. My name is Darius.
And I'm Carmen.
For the best infinite banking and financial advice, subscribe to our channel and hit the notification bell to be notified when we post new videos.
Did you know that over the past 100 years, we have had 14 recessions? And it just so happens that mutual life insurance companies have been profitable every single year, including those recessions. And the insurance companies have been paying dividends to their policy owners. So the first benefit that we want to discuss with you today is the guaranteed interest that is inside your life insurance contract. So here's the thing, when a recession hits, what happens is consumers hold back on spending any money, which means that the financial institutions aren't making money and neither are you. In order to make money, money needs to stay in motion. So it's important that you understand where you put your money so that you can continue to earn a guaranteed rate of return, which is what happens inside a whole life insurance policy.
Benefit number 2 is that you can still get a loan through your whole life insurance policy, which brings us to Carmen's point that she mentioned earlier, that money has to stay in motion. And because there's a shortage of money, the banks may make it more difficult or be less reluctant to give you financing. Now, since we have access to cash within our whole life insurance policy, that means that we can rack up on the opportunities that recessions bring. Remember, a recession is an economic detox, which means that there's a blowout sale that's going to be happening all around us. Now, what are you going to take advantage of when we have a blowout sale in the next recession? Is it going to be business investments? Is it going to be real estate? Make sure you let us know in the comment section below on some of the things that you're looking forward to investing in with some of the loans from your insurance policies, or just in general when the next recession happens.
And keep in mind, when a recession happens, that is when the majority of wealth is obtained, ladies and gentlemen. Why? Because when everyone is pulling back on their funds, investors are going crazy buying everything that they can because all of the assets are significantly reduced. So if you don't know which assets to invest in, then check out this video above here where we talk about 4 assets that can make people rich.
Benefit number 3 is that you can still get a dividend. Now, this dividend is separate from the guaranteed interest inside your contract. So on top of the guaranteed interest, you're also able to get a dividend. And there's a large number of mutual insurance companies that's been paying dividends for over 100 years. Now, just to put that in perspective, they've been paying dividends since before the Great Depression of 1929. And if you are watching this and you remember the Great Depression, you're about 90 years old. So if you had a whole life insurance policy back then, you are still earning a dividend regardless of the 14 recessions that we've had since then.
All right, so let's recap. The very first benefit that we talked about is the guaranteed interest. The second benefit is access to cash in the form of a loan. And the third benefit is the dividend that could possibly be paid out as long as the insurance company is profitable. Now, all of these things are very, very, very important for you to understand because in a recession, everyone is freaking out and trying to figure out what they're going to do with their money. What Darius and I always recommend is always parking your money inside a whole life insurance policy so that you can take advantage of these benefits. Now, one could argue that if you put your money inside of a bank, that your money is going to be insured up to $250,000 by the FDIC. But one thing that we want you to understand is that the Federal Reserve, which is the central banking system for the United States of America, only has 2% of our deposits on hand. So where do you think they're gonna come up with all the money to pay everybody back whose money is supposedly insured?
Now, here's the difference between a financial institution, and which we know of as a bank, and the life insurance company. Is the banks operate off of fractional reserve banking, which means they can lend up to 10 times more than what they actually have on hand.
And they only need to keep a fraction of our deposits on hand.
The life insurance company is based off of Austrian Economics, which means $1 protects $1. So for every dollar that they say they have, they actually have it, which is great to put your money inside a system like this because we have no idea what this next recession is going to bring to us.
And if you want to protect your money, then click on the link below to become our client so we can coach you through the infinite banking process. Because it's all about obtaining a guaranteed rate of return, but having the flexibility to still use your money however you see fit.
And if you like this video, make sure you like it, share it, and subscribe. And always remember to own your own lifestyle.
Or someone else will.